That is right, folks. I told you I'd get to it, and we're talking about it today. AMD stock. That's right. AMD reported earnings. We're a little bit late to the party, but we're going to definitely post this video tonight. That's what we do about this thing, okay? That's what we do. Down after hours in trading, actually. Was up after reporting by approximately less than 1%, nothing significant. But has since fallen down 0.6 now. We'll take a look at these earnings, and definitely one that I was excited. I thought this was going to be a beat on both ends. Look, we have a lot of negativity in the sector, but AMD is one of those companies that continues hyper growth rates. So kind of shocking to see the stock down. But let's take a look. AMD non-GAAP EPS of 73 cents beats by 7 cents, and a GAAP EPS of 75 beats by 14. So even a profitability beat's very nice. But here's where you like to see the great news here. Revenue of $4.31 billion is up 53.9% year over year. It's a beat by $200 million. Big beat from them. Big beat. And we're not talking the vegetable. Okay, we're not talking about that here. Dwight Schrute may prefer it that way, but it's not. Look, non-GAAP margin right in line where it was supposed to be. Guidance, that's right, a raise. The guidance has been, it's a beat and raise, baby. So above the consensus here, guidance for revenue of $4.5 billion approximately, which is over the consensus of $4.25, plus or minus $100 million. So regardless, they're guiding over the consensus by a good shot. I love it. So I'm shocked when you see this is a company that is on all three facets seen positivity. I mean, we see top line, bottom line, and guidance. All beats. I mean, all wins there, okay? So shocking a little bit to see the stock down, but we'll dig deeper into this, see what we can find. For the full year, AMD now expects revenue growth to approximately 65% by growth across all businesses, up from the prior guidance of 60% growth. So just incredible. I mean, really incredible. Let's take a look at the press release and look at some of the finer details here. Gross margin grew. We love to see it. We love charts. It's our favorite thing, okay? How do we love it? Well, it shows you everything here. Even quarter over quarter up 12%, gross profit up 14%. Love the net income line here. This is a significant story with this company, and it will be for the future as well as this company starts to get into the money printing phase. I mean, we're talking about a lot of money here. $923 million in net income off of $4.3 billion of revenue. That's a massive, massive amount. This is, it's one-fifth, a little bit more than one-fifth of what they're making in revenue they're printing in cash, which is fantastic. We're talking about up 137% year over year. It's massive growth from a net income standpoint. Even quarter over quarter up 30%. So if they can keep that nonsense up, it's not even nonsense. It makes me so excited. If they keep that up, this company's headed in it's already headed in a great direction. But even if they're able to grow net income by even that much, it's looking good, baby. It's looking good. And with this EPS growth, it should help with the PE ratio as well. So keep that in mind as well. Definitely one to look at. So driven by higher revenue in computing and graphics as we anticipated, and enterprise embedded and semi-custom segment. Very nice to see. The net income obviously was fantastic as we saw. We love to see it. Segment results obviously worth mentioning. Computing and graphics segment was up 44% year over year. Really nice. 7% quarter over quarter. So fantastic there. GPU average selling price grew year over year and quarter over quarter, driven by Radeon graphic products. So really good stuff there. They're selling obviously higher dollar items, growing their average selling price is fantastic for them because it's a great way to grow this business. Enterprise embedded and semi-custom segment was up 69%. No better percentage to increase year over year. 20% quarter over quarter, driven by higher EPYC processor and semi-custom product sales. Really nice to see in that aspect. It's really good to see. What else do you need to see? The PR highlights, there's nothing crazy. This is just obviously news that they typically mention all the time, but these are the segments you want to look at. I mean, this is the data you want to look at, is this revenue by segment. It's fantastic. And again, all these announcements, they're nothing significant because the stuff we've already heard throughout the quarter, so it's not like these are new announcements. So keep that in mind. And the guidance, we saw the outlook, looked fantastic for the future. Looks really good. So I'm very excited on that aspect. So we're going to look at the balance sheet on this company and take a peek at it from there. So right now, this is a 9-month comparison, $7.9 billion on the current asset line right now. As of December of last year, it was only sitting at 6.1. So the current assets grew by a solid nearly $2 billion. Growth in the cash position, short-term investments as well. So really nice to see growth in really every segment here. And even especially think about the inventories too, because the concern is a chip shortage. Everything's a shortage. Okay, guess what? These Doritos are being baked fast, right? Inventory's up year over year. Suck on that, guys. This company's, they mean business. I'll just tell you that. $11.1 billion in total assets compared to $8.9 billion the year prior. So great growth there. We'll see what they're able to do with the liabilities. Total current liabilities sitting in at $3.5 billion compared to $2.4. So there's a big growth there. But again, they grew current assets by more, which I like. Now, this is a line I think you should love. Long-term debt. Long-term debt, $1 million. That compares to $330 million of 9 months ago. They've paid off the long-term debt. A company that is nearly long-term debt-free is a company I'm in love with. I'll just tell you that right now. I'm in love with it. Don't you dare stop me. I can love whatever I want. Shareholder equity has increased $7.1 billion to $5.8. It's just a premier balance sheet. It's a smaller one. I'll be honest with you. This is a smaller balance sheet. I think they could grow it. But I love the quality of this balance sheet. It is frankly unmatched. I mean, this is a beautiful balance sheet for the segment. I love them. I love everything they're able to do. Let's look at the valuation on AMD, because you got to consider that. Look, this is a stock trading at $150 billion market cap. That's expensive. This is a company going to revenue somewhere around $20 billion this year. Yet they're trading at a market cap of, gosh, I mean, $149 billion? That's pretty pricey. But again, they could pull in a $22 billion line, which isn't crazy. Look, it's only really, when you think about that, it's about 7 times the value, which is not incredibly expensive for a company growing this hyper fast and that's making so much profit. So honestly, at these levels, I don't dislike AMD. I don't like it. I don't dislike it, I should say. Double negative. I don't hate AMD at these levels. I don't, which is crazy to say because it's right near the 52-week high. This is a fantastic company that warrants a higher valuation. It deserves this. And I don't think it's trading in a ridiculously expensive valuation either. This is a company that deserves to trade closer to the 150 a share range. We're talking about a market cap closer to $200 billion, I think it deserves. Which maybe it's absurd by me. Maybe it's absurd by me. Maybe it's not. What are your opinions? Let me know. I like AMD here. I hope you had a good time, though. Okay? Have a good one.